Hi, I'm Kyle Olson, Deputy Chief Investment Officer over at Great Gray, here to present the Q4 2025 market review. Happy to be here, and just a little bit of background myself, spending 15 plus years on the investment and advisory side with clients. So hopefully this market review will give you some salient talking points for your clients this quarter, as it's been another exciting year in the equity markets across the board. You can see here, again, coming off the heels of two consecutive 20+% performing years in the US equity markets, we churned out another great year. Fourth quarter, finishing modestly positive 2.4%, ending the year 17.1%. So again, three straight strong years of market performance, on the heels of a handful of cuts from the Federal Reserve. Although we saw a little bit of dissent in that final meeting this year, it should be an interesting story as we go into 2026, with a few rate cuts already priced in, and some tensions between between parties over there at the Federal Reserve. Looking at international markets, had a very strong year, coming off the heels from a valuation standpoint, in some instances trading at 2 standard deviations below their long-term averages relative to the US. And frankly, the strong US performance has been due to the dominance of the Mag 7, which, we'll have our chart of the quarter. We'll get to that in a little bit. You see international markets posted a positive 32.4% for the year, up 5.1% for the quarter. And we saw continued strong performance in the fixed income markets, finishing the year at 7.3%. We'll take a little look at the yield curve in a little bit. Looking across sectors in the market review, we still saw large growth and growth in general outperform value, but not by much. But we did see value start to come back a little bit in the fourth quarter. Some strong performance in the healthcare and telecom sectors just over the quarter. You could see year to date very strong numbers in communications and information technology, those big sectors in the growth area. In the international markets, you can finally see some of that orange on that bottom chart of international outperforming domestic. Of course, looking back much longer term, you see US sitting in the driver's seat. Big story behind international markets is European banks having their strongest, as well as some strong performance from emerging markets. You can see emerging markets, compared to the ACWX US and the EFA index, outperforming 33.6%. A very strong performing year for emerging markets. A little bit related to some of the supply chain and inputs to the AI systems and rare earth minerals and all that good stuff. So some very strong performance in the emerging markets. Fixed income, big story here is we saw rates come down a little bit more on the shorter end of the curve. You can see the yield curve on the top right, where long-term rates stayed relatively the same. Again, we talked a little bit about Fed potentially having some rate cuts priced in this year. So, I'd say more of a yield curve normalization, is the story of last year. Looking at the asset class kaleidoscope, you can see the international markets. What was once the best performing asset class one year may not be the best performing asset class in the following year. And we're finally seeing that red box, the international markets, emerge to the top of that list, I think. But the point of this chart is that balanced index, which is that yellow box, you can see the constituents of that balanced index is never going to be the best, never going to be the worst, and it's going to give you that long-term consistency of returns. And last but not least, the chart of the quarter, looking at the decade shuffle. I think this chart is a great visual of the constituents that make up the 10 largest companies within the S&P 500 at the beginning of the year over various decades. So it's obvious that the Mag 7 companies have really been driving the market performance, but just wanted to point out that in 2025, we only saw 2 of the 7, NVIDIA and Alphabet, truly outperformed, and they outperformed in a big way. A lot of conversations with investment managers have revolved around their positioning behind a couple of these names, because you can see relative to decades past, these names are bigger, mightier, picking up larger components of the index, and the concentration certainly are flashing some concerns. But these are, well capitalized companies and in a strong position of strength as we head into this, next chapter of AI in 2026. So thanks everyone. Have a great quarter of meetings, and look forward to talking to you all next quarter.